this week was quite the week for data. I mean, another 2.9 million original jobless claims, where 2.5 were expected, bringing us to 36.5 million total. Today, 16% decline in retail numbers. That was expected. Yet yesterday, the Dow ends the day up 350 points higher. And again, today doesn't look like it's going to be that bad a day by any stretch. So, I mean, we're almost getting to sound like a broken record, harping on the bifurcation between economy and market. And, you know, I don't think that there's anybody left out there who hasn't observed that there's this tremendous dichotomy of, like, despite the horrible economic news, markets are rebounding. And I think that we're pretty much in agreement that the biggest driving factor in that is the massive quantities of stimulus that have been injected into the system by the central bank. So given that, you know, it's now becoming it's less of a surprise to see markets doing well in bad economic conditions. What should be our approach towards trading in such an environment?
Well, that's a really good question. And I think I just wanted to kind of just go back based on what you said just a little bit to the report that came out this morning. We were expecting the number, actually, the Wall Street was expecting to be down 11 point something percent, and we were down 16.4%, which is just mind-numbing when you consider retail sales. 70% of GDP is retail sales. We're talking negative 3-4% next quarter. It blows my mind away, James. To start there, it just blows my mind away. But here's what I think. I think part of the reason we've seen this upside in the market was because of the humongous number of short sellers unwinding their positions post the April crash. I've been monitoring short interest, and short interest has been decreasing. It was obviously at record highs going into April, but a lot of investors and traders have been unwinding their positions since April. So I would say, here's the way I'm looking at it. The upside that we've seen leading into May, I believe that everything that happened the last 2 weeks of April was almost a mechanical response to the number of short positions. In other words, I think somebody was using a bicycle with those two little baby wheels, and finally when May started, they took them off. So in other words, in my opinion, and this is my opinion, but I'm basing this based on the short interest that I'm following, is that we've only seen the natural reaction to the stock market. In other words, standing on its own 2 feet, if you will, just the past 2 weeks. And the past 2 weeks, if you look at the trading action, it hasn't been as parabolic. It's been a lot more sideways and range bound than what we saw the last 2 weeks of April. So in my opinion, I would say 70% of the upside that we saw was mostly responsive, or a response to the humongous downside. And only in the last, say, 7 or 8 sessions, we're seeing the market kind of do its own thing. And to be quite honest with you, what I'm seeing is not really all that bullish. I'm seeing a lot more of a mixed market cycle, and I'll tell you why. Remember, I'm looking at markets from a technical perspective and momentum perspective, and I'm looking at relative strength. And what I'm seeing, James, is I'm not seeing the typical response that we usually see in a bear market where most sectors are going down. I'm seeing a raging bull market in technology, in healthcare, and consumer discretionary stock. And then I'm seeing a raging bear market in utilities, consumer staples, industrial, energy, so forth, real estate, and financial. So because this is not a typical financial recession, but this is caused by a pandemic, we're not seeing as much of a downside as we are seeing more of a reorganization or readjustment of where the money is going, if that makes sense. It's not so much of, hey, let's take money out of the market. It's more of, hey, let's take money out of these stocks and put them. It's more of a rotational shift that I'm seeing as opposed to a withdrawal of money, if that makes any sense to you.
Well,
Because
it does, especially in the context of money is not affected by matters economic. You know, the money itself is the measurement, is the element by which we measure economic activity, but it doesn't really, it's not affected by the economy. Money doesn't disappear because the economy, you know, takes a header. It just, as you say, it redistributes itself in response to external stimulus. And, you know, that in combination with the fact that the very base supply of money continues to increase exponentially dictates that there must be the influence of great supply of money, which is essentially a form of fundamental demand. It has to go somewhere. So
exactly.
therefore, you know, okay, great, we're still printing money like crazy. It doesn't really solve any problems in the broader economy because none of those people are the recipients of such largesse. However, the banks and institutions that are just deploying it wholesale into sectors that are anticipating a long point in the future where everything's back to normal, and hey, the money's got to go somewhere. So that's interesting. But so just like the money from the government, the majority of it, my brother told me him and his wife got a check for $3,200 yesterday.
Great.
Yeah, and he's working and she's working, so it's like just free money, and it's almost as if, you know, the government's saying, well, let's sprinkle a little money among the people, so that they don't complain so much about the huge volumes we're stuffing into our own pockets amongst our near and dear. And it's just like, well, great. So you're not solving the pandemic issue. Nobody's investing in testing at the government level that it needs to be.
No.
We're rushing to reopen the economy because from a populist standpoint, that's becoming a thing. It's almost like, boy, if I was an alien from an intelligent species parked offshore Earth and was watching this, I'd be like, oh my gosh, there's really no point in going here because these people are insane.
I think your description is very, very accurate. And it's like a Band-Aid on top of 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 a Band-Aid. There's no material solution to any of this. It's like whack-the-mole, you know? It's like, boom, oh,
yeah.
And unfortunately, see, the question is, and I think this is a good question would it be better for us to say, hey, the hell with it, we're doing terrible, let's deal with it like men, let's go through this terrible financial period and let's finally build some value in the market? If that happened, I don't know if America, the way people are built these days, would be able to survive. So I don't know if there is another solution to this. I don't know if we have another choice, James. That's the problem. I don't know what would happen to the economy. I don't know what would happen to the president. I mean, we may have a civil war if that happens. So
well,
it's
interesting that you say that, because that is a factor that is becoming more present in Google searches: civil unrest, civil disobedience, civil war, anarchy. All these terms are rising in popularity in the search, which is sort of it's a finger on the pulse of what the sentiment is out there, and especially for people who are losing their jobs. They're starting to be like, I'll tell you, I actually saw an eviction notice for a company in my universe yesterday that was sent to me, I think, by accident. And it's like, I was shocked to see this company was receiving an eviction notice. And, it's a company that's been in business in proximity to me for almost 20 years in the same spot and stellar reputation. And it's like, and I'm watching this bun fight between the building landlord and this business that has been a loyal and faithful tenant for over 20 years. and it's like the slightest sign of trouble, and the big landlord is saying, "You're out. That's it. You're out." And I'm thinking, boy, this is just so topsy-turvy. I mean, if you had a relationship, like if you were a farmer and you were a tenant farmer and you had a bad crop and you went to the landowner, the landlord owner wouldn't say, "Bad farmer, go." He'd say, "Well, yeah, it was horrible weather. Well, let's take the loss together and let's hope next year's better. But what can you pay me? And I'll defer this." But they work together, because that's how we move ahead as a society.
That's right.
This sort of great, compartmentalization of society into the haves a ridiculous amount, and the have-nots and the have-nothings. I mean, it's like it's dangerous. It's the precedent situation to civil unrest and revolution. And given the well-armed nature of the population, I don't think we're that far away from a situation where law and order starts to break down in areas particularly hard hit by poverty and foreclosures.
Well, gun sales are up through the roof. They're estimating. I learned this number today. This will blow your socks off. They're talking that if this is a statistical number, this isn't a theory. They said that for every 4 months, restaurants and stores, department stores and brick and mortar stores are closed 4 months. It increases the risk that they will not reopen by 61%. So if you're out of commission for 4 months, there's a 61% chance you will not come back. That's a statistic. This is not my theory. That's pretty huge. That's pretty huge. And so imagine what you were just saying, your scenario, the farmer scenario. He's been there for 20 years. He takes off for 4 months. He doesn't produce for 4 months. His odds of bye-bye, 61%. That's huge. That's huge. Even if he's been there for 20, 40, 60 years.
Right.
So that's vulnerability.
Yes, I was having a conversation yesterday with a gentleman at Farm Credit Canada, which is essentially the government-sponsored credit union for farmers. And in that, technically, I'm now a farmer. I was talking to him about the options. I wasn't reaching out to him to borrow money because I don't need to borrow any money. I was reaching out to him to find out what the situation was with the agricultural funding in Canada, and I was curious as to whether there were any programs available for farmers. We were able to access some government funding for small business that allowed me to, basically take a deep breath and relax about, payables and everything across. I've got several other businesses, and so it was funny because he says, well, like we're lending money, but not at low interest rates. I mean, low is a comparative term, but
right.
So I said, so what's an example? He says, well, for example, if I was to borrow $250,000, it would be 5% interest, and I said, that's interesting, considering we're almost at zero interest rates, and there's all kinds of talk about them going negative. I said, shouldn't you be paying me to take a loan off of you? Anyways, that was a funny aside conversation. So, I guess what we're saying here is that really we should just be following where the big money is going, because that money is going to drive asset prices higher within those sectors. And we have to learn to ignore the economy when it comes to the market and just follow the money.
Well, honestly, James, I just don't see any other ways of profiting right now, because if we start putting value on things, we may be in trouble for a very, very long time. So my view right now is and I've been saying this since day one with this COVID-19. In my opinion, we are nowhere closer than we were a month ago. We don't know how many people are infected. We don't have a vaccine. We don't have systemized testing. Till we have that, we honestly don't know where we stand. We're in a moving target environment. And is this thing going to morph? Is this thing going to are people going to be sick again who were reinfection? We
Mm.
don't have a clear path forward. We don't have enough answers to create a scenario where we can project forward with any degree of stability. We just don't right now. And until we do, it's going to be a very big question mark. I don't believe the society will be able to begin putting things back in place till we have some answers. Until that time, it's just a big moving target. Until that time, I'm going to play what is making money during the COVID-19 period. I'm not looking ahead. I'm looking even less further ahead than I did before. I'm looking really short term. What's moving now? 5G, solar stocks. I'm only concerned with momentum as it impacts our society right now. We know right now that canned foods, I'm just throwing out the simple examples. We know right now, 5G, it's hot. We know right now canned foods, till we have a vaccine for this, is going to be hot. So those are just two of several factors. Solar energy, very, very hot. My focus right now is I'm going to put extra, I don't want to be distracted by anything into the future. I'm trading what's on the table right now, and I'm forgetting about the rest. And yes, I do believe there's going to be some amazing investment opportunities, but I don't think we are. I think the market, I think people are being reactive. I think this was too big of a shock for people to absorb. They're trying to make the best they can out of it. I don't think the second shoe has dropped yet. I believe we've got, like I said, I opened an account in March. I still haven't bought one share. This is an investment account. I'm still waiting for the right time. I don't think we're there yet. I think we're going to still see some remarkably negative news that's going to shake the world. And I hate to be such a negative Nilly, and I'm usually not, but I think we have to really kind of hunker down, stay really focused on right now, and forget about the future till we have more information to drive our decisions.
Right. That's interesting. Okay, so I'm with you there. We've been lucky on our Race for the Cure webinar that we had a few weeks ago, in that all of the stocks are just performing crazily. Like I think the best one was Novavax, which is up 176% in 30 days, and so I'm with you there. Follow the ones that are working, ignore the ones that aren't, and also, the one thing that I would point out, though, is that gold has been performing very well. I had Jeff Zaninieri on Monday, and he pointed out that gold was ready for a breakout. Well, 3 days later, here we are. Gold breaks out to 1740, 1750, holding strong, which means all of the miners are catching a bid now too. And this is very consistent, a consistent reaction with the, with the quantitative easing, stimulus. I like to call it creative counterfeiting by the government.
I like that.
Well, it really is. If you consider that it's if cash is supposed to be representative of the value of the economy that backs it, then the volume of U.S. cash way exceeds the value of its combined assets and goodwill, if you ask me. Now, that's just a matter of subjective opinion. So,
well, I don't know about that. No, there's a lot to back that up. I don't know about. Give yourself a little more credit than that. There's a lot of evidence to suggest that, like actual dollar and cents math. But we won't talk about that right now.
Right. I don't want to sound like a wet.
Let's just put that under the. Let's just forget about that right now. Reality then.
Yeah, exactly. Reality, we don't need to talk about reality. Let's just talk about the fun we're having in the market. But anyways, so Roger, let's leave it there for now. That's a great wrap on the week. What do you see happening next week?
That's a great question. I'm actually starting to see, I think we're going to see, this is going to be the last week of earnings. So we're going to see the retail stocks, and we're going to see small caps. And as you know, retails have been by far the worst sector. So I think the negative sentiment from those stocks is going to start resonating with investors. And I think we're going to see some more downside. Not nothing crazy, but I think the market is as I said, this month, it seems like the market is standing on its own 2 feet more than last month. So I believe more of that negative news, and more importantly, the non-existent forward statements that these companies are going to offer us are going to maybe have a little bit of a wake-up call with the investment crowd. And I think I think today's report, the retail sales report, is going to resonate going into next week as well. So I'm not seeing too much upside. I am seeing upside in gold, by the way. And I'm also starting to see more rotation on stocks between the sectors that are moving higher and lower. Bank stocks are no longer and airline stocks are moving higher. We're having some degree of movement, but still way too early for a clear long-term trend.
You bet. All right, Roger, thanks very much for your contribution as usual. Very insightful. I look forward to speaking to you next week. Have a fantastic weekend.
Have a great weekend, James. It was a pleasure as usual. I'll talk to you real soon. Thank you.
Bye for now.